Look at this, people. What's going on, guys? Welcome back to another YouTube video. So today, I'm going to be talking to you guys about what is the most optimal risk to reward when you start out in trading. Should you be going for the 1 to 5s? Could you go for the 1 to 3s? Or could you even trade negative risk to reward? Let's talk about it and get out of this sun. Looked all well and good, but sun shining in my eyes. Let's go elsewhere. There we go. That'll do. Look, we've got Sammy here as well. Hello, buddy. The main thing that, and I'm going to tell you guys this from my mistakes in trading. We're boring them already. The main thing when you start out in trading is you want to get good at calling market direction well. You want to be able to call market direction well and get comfortable with seeing the moves happen and seeing the direction play out and seeing you're able to call it well. And that should be more satisfying than saying, I just caught a 10 to 1 risk to reward because I had the tightest stop loss. That doesn't matter. If you try and get the tightest stop loss with the tightest risk to reward in the beginning and you get stopped out before the real move happens and you called that real move, that is not what you should be doing. And it's all about what fits you mentally as well. For me personally, I would rather stack up more lower risk to reward trades than having multiple losses and then trying to get that jackpot 1 to 5 or 1 to 10 risk to reward. I've done all that. And for me mentally, I deal better with just say going for 1 to 2s and having more consistent 1 to 2s or 1 to 3s than trying to get that jackpot 1 to 10. Because the reality is the people who show you the 1 to 10s, they're very unlikely holding that at 1 to 10 full risk to reward for the entire trade. You know, if you're up 1 to 5, you risk 1%, you're up 5%, but you're aiming for 10%, there's no way that you're not going to start to secure some of that trade at 5% profit. And then if you do, then your 1 to 10, once you do take partials, is actually a lot less than that. So I would rather trade my full position 1 to 2, 1 to 3, and do that consistently than try and squeeze out the tightest stop loss. So for you guys who are maybe new to trading, you're just starting out, you are much better off trading with a bigger stop loss and just going for, you know, the 1 to 1s, the 1 to 2s, the sometimes even 1 to 3s. Do not focus on trying to squeeze out the biggest risk reward because you want to get good at calling market direction well. And if that means that you have to have a bigger stop loss, so be it. That's fine. Your guys' goal is just to get consistent. Get consistent with a wider stop loss, and guess what? Over time, there'll be more opportunities where you can refine your entries, look back at your trades and be like, oh, cool, maybe if I had just put my stop loss here once we grab these lows, then, you know, that would be a valid stop loss and I could have got a 1 to 4 or 1 to 5, for example. But in the beginning, you want to let your trades breathe. Don't worry about having the tightest stop loss. Don't worry about maybe managing your trades. These are tools that come with time in the market and seeing the same things happen over and over again. And more so, looking back at a lot of your trades and refining it as you progress in trading. If you even trade 1 to 1s, if you have a good win rate, that can be profitable. Even if you just trade 1 to 2s, I would say minimum 1 to 1.5 to 1 to 1 to 2s. That's the minimum you want to go for. But sometimes if you have to secure a trade at 1 to 1 because it comes into an area where you need to manage your position, that's great. You can also do that as well. But when you're actually entering the trade, make sure you're at least getting 1 to 1.5s to 1 to 2s. Let that trade breathe. Don't try and get that tight stop loss. Let it breathe. Keep the technicals simple and you will refine it over time. A lot of the stuff you see on social media with the big risk rewards, it's a lot of the time BS. If you look at it as a percentage, well, if you close 50% at a 1 to 2 and then you ride to a 1 to 10, well, that 1 to 10 is not 10% return. It's a lot less than that. If you think you're going to be able to pass your funding challenge in one trade, if you can squeeze out the biggest risk reward, yes, maybe you could. But mentally up here, it's going to suck to have to deal with multiple losses and then trying to catch that one big jackpot trade. And you have to find out what works for you. Some of you guys might be okay with that. For me personally in the beginning, that's what I would focus on, and that's why I struggled for so long. I wish I had someone who told me, just go for the 1 to 2s, you know, get consistent and stack up more 1 to 2s than taking loads of losses trying to get the tightest stop loss and then trying to get that jackpot trade. It's whatever works best for you. And for me now, like you guys see me do on stream, we work best when we go for the 1 to 2s. And if it runs into a 1 to 3, 1 to 4, amazing. That depends on what the market gives you. If there's amazing volume and you squeeze out more and it has a big impulsive move, then that's the times where you get the bigger risk rewards. But in the beginning, do not focus on them. And whilst we're here, I will touch on trade management because you guys see me trade live on stream every single day, 7 to 9 a.m. London time, and I manage my trades very, very well. Now, again, in the beginning, it is probably best for you to not worry about trade management. Enter your trade, have your stop loss, have your targets, and let it breathe. You need to build that data. If you keep managing your trades because it goes into profit, then comes back down to break even, and then you close it, and then it goes to profit, that's not a good thing. Being able to manage your trades when it's going against you is something, again, that's going to come with chart time in the markets. It's not something that you should massively focus on just yet. Again, build up the data and then you can go back and analyze all these little things. And that's the importance of journaling. If you don't journal in the beginning of your trading career, again, this is a mistake that you're making and you need to change it right now. Do not be lazy. This is not a hobby. This is a business. Treat it like one. Start building that data and you're going to have a much better trading career and an overall better journey in trading. So I'll keep this short and sweet. Remember, focus on less risk to rewards, keep it positive, let your trades breathe, manage and refine over time, and you guys will be on a much better journey than the people on social media who are trying to sell you the dream of being able to catch 1 to 10s. It doesn't exist. So I'll see you guys live on stream every single day, 7 to 9 a.m. London time. I'll see you guys there. Peace.